So the main themes around this topic is that we expect that, as we saw in the introduction to accounting, that it is important for businesses to report on their financial performance to interested users, so that these users can use the information to make decisions. So this topic in particular is looking at how we can prepare the financial statement to be able to determine the performance of a particular type of business, and that's a sole proprietorship business. Okay. Now, when you pick sole proprietorship business, it's a business that is owned by one person or an individual, managed and controlled by that individual, right? But if you go into it, we have those that are trading and those that are rendering services. The traders are those who are buying and selling goods, the tangible items, and the service proprietors are those offering, maybe it could be a barbering service, food and accommodation services, etc. Okay. So our major focus will be on reporting on how they are performing. And if you are looking at the performance of a business, your first point will be either the business is making a profit or a loss. It's one of the key things, right? Whether the business is making a profit or a loss. Okay, I want to believe my professors can see my screen, right? Please, can we see the screen?
Yes.
Okay, great. So, like I was saying, you look at the profit making or loss making issues of that business. And you also look at some of the resources the business has, that's the asset. You look at how much the business is owing and also how much the owner has invested in the business. Okay, so under this topic, we're going to look at preparing of financial statement. And I think you know the financial statement, right? But let's look at it. So final account of financial statements are account and statement created at the end or conclusion of a fiscal year to inform management, owners, and other interested parties of the profitability and financial situation of a business. So the main purpose of preparing financial statement or account is for us to be able to determine the profitability. So is the business making profit or losses? Okay, and also to tell about the financial situation. The financial situation bothers about, stating the assets, the liabilities, and capital of that business. So that at least at a glance, you can tell that this business has a lot of assets compared to its liabilities. So if there are any issues, it can sell off its asset to settle the liabilities or otherwise. Okay, so there are three main accounts we are supposed to prepare, or financial statements, if I'm to put it. Okay, some are account, others are just statements. Three main under the sole proprietorship. And the first one you see here is the trading account, and we'll look at it briefly. The two is the profit and loss account, and the third is the balance sheet. So these are the three main final account of a sole trader, right? Of a sole trader. The trading account, the profit and loss account, and the balance sheet. The trading and profit and loss account is referred to as income statement, right? So in some books, you see income statement and balance sheet, but the income statement is made up of the trading account and the profit and loss account. And note that the trading account will only be prepared for a sole proprietor who is buying and selling goods or who is a trader. If the person is rendering services, you can't prepare a trading account. So take note of that. Let's pick the trading account and look at it into detail. So I think one of you will do the reading for me, what you see under trading account. Frank, I think you do the reading for us. So Prof. Frank, please unmute and read for us what the trading account is.
Trading account. It is It is prepared to determine gross profit or gross loss of a business for a particular accounting period. It shows the result of buying and selling of goods. It can be presented in a vertical format or horizontal format.
Okay, great. Thank you very much. Thank you very much. So as you read, this account is prepared to determine profit or loss, but a particular
Vertical format of the trading account.
Okay, well noted. Thank you. So this account is prepared to determine or calculate to determine or calculate a particular profit, and that profit is called gross profit or gross loss. Ladies and gentlemen, what it simply means is that if you are into buying and selling of goods, if you are a trader, the profit you make from your buying and selling is called a gross profit. And if it is a loss, it's a gross loss. So note that the profit or loss you make from your buying and selling only. So if you buy and sell shoes, the profit or loss you make on buying and selling shoes is that gross profit or gross loss. And for you to get that, you have to prepare a trading account. Okay, so it says it shows the result of buying and selling of goods. Now, I want to take you to JHS. The issues about how to calculate profit or loss. I think you want to share with me how you were calculating profit or loss in JHS. You were given some information, they will ask you to calculate the profits the person made. Who is going to share? Sandra.
Please, the profit, to calculate the profit, so selling price minus cost price.
Exactly. Thank you very much. Exactly. You hit the nail right on its head. So in JHS, remember when you are finding profit, you look at, the selling price minus the cost price, right? It's the same idea here because we are buying and selling something. However, we will go beyond the selling price and cost price. We'll be comparing these two things. And these two things are, in place of the selling price, that will be the net sales. And in place of the cost price will be the cost of sales. So in the trading account, these are the two things that we compare, your net sales and your cost of sales. So at least we need to appreciate what net sales is and what cost of sales is. Please, any question at this point, or I can continue? Any question, professors? Okay, so let's appreciate the things that we just introduced. So when we say net sales simply means, okay, I think I have a message. No question. Okay, great. Net sales refers to the difference, okay, so please note it, the difference between sales revenue and any return inward. I think as of now, my professors know what return inwards is. The goods that your customers return back to you. So when you sell and your customers return some of the goods to you, that's return inwards. So we are saying net sales is your total sales revenue minus any return inwards. Example, if you sell 200 shoes to your customers, maybe one of the shoes cost or the price is 10 cedis. So that would mean you would have sold 500 times 10, 5,000 Ghana cedis. If 10 of your customers return their shoes back to you, 10 shoes back to you, then it means that you would have to refund their monies to them. So that 10 will be 10 times 10, 100. So out of the total 5,000 you sold, they have returned 100 cedis to you. So if you want to know your net sales, the true sales, you have to less the 100 cedis from the 5,000 so that you'll be able to say that genuinely you have sold 4,900. So that is your net sales. Please, are we clear on that? Okay. Then we go to the cost of sales. The cost of sales. Prof, I say.
Please, the net sales, can you come again?
Okay. So the point I'm making is that, okay, the point I'm making is that your net sales is your sales, okay, your total sales minus or less return inwards. And I gave an example that if you, for example, you sell 500 shoes, okay, 500 shoes, one of the shoe is 10 cedis. So that will mean you get a total of 5,000 cedis, right? So after the sales, you were in your shop and then 10 customers came back that, oh, they don't like the size is bigger. So they returned 10 shoes back to you. Okay, so you see, initially your total sales was equal to the 500 shoes you sold multiplied by 10 cedis each. So you had 5,000 Ghana cedis. Okay, and customers returned 5 shoes back to you. Or 10 shoes, right? So that 10 shoes will be 10 times the price of one shoe is 10. So it means that your customers return back 100 cedis to you. So if you want to calculate your net sales, is your total sales 5,000 minus what the customers returned back to you. Because that cannot be counted as sales because the customers have returned it back to you, and that's your return inwards. So if you are looking for your net sales, you pick your total sales, then you less any return inwards. Prof, I say, is that okay?
Yes, please.
Okay. So that's the first component in the trading account, your net sales. The second thing you have to look for is your cost of sales. And this cost of sales refers to all the costs you incurred to be able to sell the goods. And to calculate this cost of sales, you need some information, right? And we'll go through that information one by one. Please, are my professors very okay at this point before we continue on the cost of sales? Okay, now for you to calculate your cost of sales, you will need the following. The first item is your opening stock. I'll list them for now. When we rejoin the second session, I would explain them one by one. You need your opening stock, you need your purchases, you need any return outwards, any carriage inwards, you need your closing stock, then you need any direct trading expense. And an example of that is wages. So in principle, you need 1, 2, 3, 4, 5, 6 basically 6 items to determine your cost of sales. Okay, so I think we'll do that in the next session. So let's all rejoin the second session using the second session details. And then we'll pick these items one by one and know what each of them is. And I want to believe my professors appreciate some of them. Opening stock, closing stock, at least you should know what it is. So I'll see you in the next session. Thank you very much.